These two thumbnails are from videos that I shared not long ago, just within the last few months, when one of these portfolios hit 200K and the other hit 100K. Now, today, they don't total about 300. They're at 327,000. I've made no changes to those investments. I didn't add any more funds. It happened while I was sitting here doing something pretty boring, just staying invested into those funds and companies that I've chosen for those two portfolios. So I'm giving you this update on a day when the indices are hitting record highs. We can see here through these headlines, the S&P is back at a record high. The Dow hit 54,000. The stock market is being fueled by AI-linked earnings and hopes for an Iran war deal. And so we're seeing lots of green when it comes to the heat list today. The Dow and S&P up about 1.7%. And the NASDAQ up 2.5%. So let's get into how this is impacting my portfolios. What's driving the gains? And we'll take a look at a recent comment that I received that I want to make sure that all of my viewers know about. So when the S&P 500 hits an all-time high, of course, it's a headline that I love to see because I'm holding investments that give exposure to the S&P, the total stock market, like FXAIX, VOO, as well as VTI. These are the top holdings of FXAIX, which I hold in my account over at Fidelity, and it's heavily weighted into those companies that recently delivered strong results when it comes to earnings or have just been thriving in general. Companies like Apple, Microsoft, Nvidia, AMD, Intel, we're getting exposure to them all if you're an investor into the S&P like me. So of course, I'm going to be benefiting from the growth of these companies without having to guess every winner and decide how much money I'm going to invest into a bunch of different companies. I can be selective and rely on my index funds for that diversification and exposure to these big names. So now let's jump into the larger of these two portfolios. And the current value when it comes to this one is $213,736. My anchor, the foundation here, is FXAIX. I hold 753 shares. I'm currently up 69.53%, a gain of $83,000. This portfolio right here was built from my first job that I ever had. I worked there for many years, and when I was left off with my balance, which I moved over to Fidelity, it was about $126,000. And now it's continued to grow. It's about 95% into FXAIX, and I have 5% of individual stocks here, being Taiwan Semiconductor, which I have 15.6 shares. I'm currently up 114% when it comes to that investment. And Nvidia, I'm holding 21.4 shares and I'm up 63.72%. So these are two companies that have been benefiting from the strength of semiconductors, AI infrastructure, and long-term demand for advanced computing. Just a couple of companies that I had a high conviction in and wanted more exposure to when it came to my portfolios overall. Now, onto that 100K portfolio, which is now up to $113,370. This portfolio has always been at Fidelity, but I made some changes to it last year because that's what I do. I'm very intentional and always evaluating my portfolios to make sure that I'm achieving my goals and they are on track to build and grow and have me ready for retirement and all of my goals. So in this fund, it's 50% into the U.S. Large Cap Index Fund, ticker symbol FLCPX. I'm currently up 15.15% when it comes to that investment. I have 45% in a 2065 target date fund, which is up 16.70%. And just 5% of a former company stock, which is up 22.42%. So since my last update, this portfolio is up about 12.5%, but overall, the total gain here on average is 16.21%. Reflect my risk tolerance, my time horizon, and my goal. Make sure you're evaluating your portfolio to make sure that your portfolio is doing the same for you. Now, I'm going to share a comment that I recently had on one of my videos that could help someone. Taking a look at this portfolio on the cash line, you can see I have just 55 cents. And when you have a cash balance in your investment portfolio at Fidelity, it sits in SPAXX, the Fidelity Government Money Market Fund. Here's a look at the average annual returns. 1 year, 3.5%, 3 years, 4.3%, 5 years, 3.3%. So basically, the return of your high yield savings account. Now, this is the comment that I received just a few days ago. I had $180,000 sitting in SPAXX. Unbeknownst to me, at least I was making 3%. So I just moved it into this fund. And they're referring to FXAIX. They go on to say that hopefully it does as well. It has been tracking for the history of the fund. So thank you to this viewer for sharing this. You're definitely not the only one. SPAXX is a money market fund. It's designed to hold cash and provide stability. It's a great place for your money for an emergency fund or while you're waiting to stay on track with your dollar cost averaging or trading, whatever you do in your account. But you definitely have to invest in order to see the gains like you see here that I've achieved in just a couple of years. So if you have time, 10, 20, 30 years, don't be conservative. Don't be sitting in cash. Have a plan for how you're going to get your money allocated into whatever your chosen funds, individual stocks that are the right fit for your portfolio. So I've seen other content creators talk about this, and I at one point didn't think it needed to be said, but I've heard it more than once. And so I want to make sure to encourage everyone to take a look and make sure that all of your money is invested. Or you have a plan. Are those dividends being reinvested automatically? Look and see if you're sitting in cash when it comes to any of your portfolios. I don't want you to be missing out on the potential of long-term growth. We're seeing all-time highs today, but we will see them again in the future. So we have to be on track. We have to be invested. So SPAXX has its use, its function, just like our high yield savings account. But funds like FXAIX are designed to have us continuously building our wealth over time. So it's your job to manage your money. Make sure you're doing it well. When it comes to these two portfolios that I shared an update on today, I'm not doing anything different. They're just going to stay invested. In other portfolios, I'm focused on adding investments for additional growth. I'm working on SPMO. A new addition will be VGT. I'm holding SMH. I will be building into that one also, as well as some other blue chip stocks, including Microsoft and Meta. So I'm looking for opportunities when it comes to technology, AI, semiconductors, while keeping my core positions like you saw today with FXAIX and FLCPX. It took time to reach these milestones, 100, 200, now 327,000. The market definitely has its ups and downs, but owning the right businesses and index funds to keep you on track is a strategy that's working for me right now. So whether your portfolio is 3,000, 30,000, or 300,000, stay focused, keep building. Make sure you're invested into the right things that are in line with your goals, that are growing. And if they are lagging, have an understanding as to why, so you can decide if it's time for a change. And then from there, let compounding do its work. Thanks for watching. Make sure to leave me any comments or questions. Check out my referral links. They'll be in the description and pinned in the comment. There's a link for the MooMoo Investing app. And another way that you can support the channel is through channel membership. I hope you enjoyed. Make sure to like, subscribe, hit that notification bell. hype this video, and share some of your milestones or goals in the comments. Thanks for watching. Okay, bye.